Hello and welcome to another episode of the Opus Well Style podcast. My name is Iván Watanabe here with my partner, Evan Wohl. We're excited to have on today Geoffrey Urquhart. Jeff is the CEO of G Sharp and founder of RefiDesk. And Jeff and I had a conversation recently about their platform and all the innovations that they're sort of have in the student loan space. And obviously based on all the news headlines coming out, it's been an interesting time for you and for student borrowers. So really wanted to have you on to come on and share more about your platform and also kind of, some advice that you're giving folks these days and as it relates to student loans. So thanks for having us on, or thanks for coming on, I should say. We really appreciate it.
Yeah, absolutely. Thanks for having me. Good to see you guys.
Awesome. So Jeff, just tell us a little bit about you, sort of how you started, where'd you start off and how'd you go about founding RefiDesk?
Yeah, so I've been in financial services for 25 years, worked at various banks and fintech companies. I helped start a company called GradFin back in 2016. We subsequently sold that to KeyBank in 2022. And since then, I've just kind of been looking back at, what we did well and what we could improve. And that's where RefiDesk comes from. So, we're excited to share more about that over the course of our conversation.
Awesome. Well, as I said, right now, there's so many headlines on the different federal updates and student loans. And so, based on, I don't know, today is March 31st, 2026, right? So I'm sure as soon as we get off the podcast, we'll see another headline. But as it stands at the current moment, what's changed recently with the federal student loans and what do you think borrowers kind of need to know in general?
Yeah, I mean, the system, it continues to get more and more complex and restrictive at the same time. We're seeing the SAVE plans getting phased out. Pay as you earn, another income-based plan is getting phased out. So you're seeing kind of changes in repayment options, but everything is kind of consolidating toward more of like a IBR or income-based repayment plan path. So you have that, and then you have these new borrower caps that are coming into play. For professional students, graduate students, as well as parents. So it's interesting time to say the least.
Can you explain a little bit more about the borrowing caps and who they impact?
Yeah, sure. So you have professional students, which are your doctors, your dentists, your lawyers, and those folks, and they're capped out at $50,000 in federal funding a year, and $200,000 over the course of their education. You have just traditional graduate students. I mean, this could be nurses, it could be anything like that. They're limited to $20,000 per year and $100,000 over the course of their education. So,
were they previously?
And then it basically, yeah. So there were no caps previously. It's interesting. So, you kind of had unlimited opportunity to borrow from the Department of Education previously, and now they do have caps, and you're going to have to figure out kind of a strategy to fund those loans or the education gap going forward. So you're really moving away from sort of strategizing at the end of your education to more strategic planning while you're in school and borrowing. So
yeah, so, I mean, it's super interesting. I mean, I think about my wife and a lot of the physicians that we work with, the private market rates are not as good, and so to haven't been as good as some of the previous rates, and so have to go private to try to find a solution outside of those caps is could present a problem. But obviously you all have a great platform for that, so and we'll definitely discuss that as well. But right now, based on where rates are today, how should borrowers be thinking about sort of the forgiveness plan versus refinancing today, given, what we think potentially could happen with some of this forgiveness and, where we know rates are at the current moment?
Yeah, I mean, really, what it comes down to, and from my perspective, is you have to really figure out whether or not a borrower is kind of going down that forgiveness path, right? And we have the system and process to be able to do that, and also look at refinancing, right? So you kind of look at both options for folks that have already finished up school, and really come up with a strategic plan, thereafter. But does that answer your question, Iván?
Yeah. Is the general
We
consensus?
can
I'm just
try that
curious,
one again if you want to try that one again, we can. So yeah.
Okay. Is the general consensus right now that there will be some level of a forgiveness plan in place with those that have already entered into the plan and have planned around it and have been submitting, have been submitting to the I'll call them regulators, but that's not what it is. But just submitting their payments and keeping track of it, or where do you all stand on that?
Yeah, I mean, so you have your public service loan forgiveness, and so that's a 10-year plan, and that is still very real. You have to make 120 qualifying payments while you're working for a nonprofit or government entity. So that's very real. The government is backed up in terms of processing those forgiveness
Mm-hmm.
applications. There's I've heard anywhere from 40,000 applications to 80,000, backed up. But it is still written in law, and we do expect that to continue to be an opportunity. You also have, for folks that work for-profit entities, they do have loan forgiveness through an income-based plan. So they're really going to be two plans, right? There's sort of the heritage income-based repayment plan, and that's anywhere from 10 to 15% of your discretionary income. And then they have a new plan that they've announced, but it's not official yet. It's called the RAP plan, and that's about 10% of your household income. So so you can get your loans really forgiven anywhere from 20 to 30 years with those plans, and those are really good options for folks that may not have enough income to support a monthly payment there. So.
And so those particular forgiveness plans are for those that are in the private sector, you're saying, not necessarily the public sector.
Correct. Yeah, exactly. And so, the folks in the private sector, you really want to look at, are they headed down that forgiveness path, or should they refi? And it really just comes down to income stability and budgeting and the like.
And to me, I mean, it seems so fickle that you could go down this forgiveness path and then there could just be a new administration that changes their minds, and then you spent all that time going down that path and didn't work out. I mean, what is your confidence level that these things will stay in existence?
Yeah, I mean, I think there's going to have to be some form of it. I think it's everybody that, I mean, if you look at even like the repayment plan options, right, for borrowers today, and or borrowing limits, right? So, everybody's got, who's been in repayment is being grandfathered in, like from a borrowing perspective as well as repayment perspective. So, I feel pretty confident they'll be there, and I'm very confident about PSLF. We've seen borrowers achieve hundreds of millions of dollars of forgiveness. So, I do still think it's going to be there.
And then go ahead, Iván.
No, go ahead.
Well, I've got conversations with clients about this stuff all the time. I used to use GradFin regularly, so thank you. What do you see are the biggest mistakes that people make on a regular basis that are probably just like the easy wins for most people?
Yeah, I mean, the biggest ones we're seeing is, your borrowers are in the wrong repayment plan, or they're not, tracking their PSLF payments properly.
Hmm.
And then, the others, they may refinance, at the wrong time. We often see people missing, 20, 30 payments toward PSLF. And, we see borrowers kind of getting interest on the refi side. We see them, get kind of intrigued by the lowest rate offer that they get, right? But with that, usually that's a 5 or 7 year loan, and that can kind of limit payment flexibility,
Hmm.
and can put you in kind of a tough spot if things kind of turn unexpectedly.
So right now, given the rates in the markets, like what should borrowers be thinking about as it relates to refinancing? If they feel like that's the path for them, what should they be considering, and what does the market kind of offer today for them to choose from?
Yeah, I mean, really, you're from a refi rate perspective, you're looking at, we see rates in the mid to low threes for shorter term
Really? A
loans,
lot.
all the way up to, yeah, a lot of fours, even in the 4% range for 20-year loans. Those are for really high quality, highly qualified borrowers. But anywhere from sort of 3 to 5% really is what we're seeing on the refi side. But when it comes down to timing, and when they should sort of pull the trigger, I think really you have to assess what their repayment's going to look like under the government plan, how much interest they're accruing, while they're staying in that federal plan, and kind of looking at the savings opportunities there. But really, the government does give more flexibility in repayment, so you want to make sure that borrower is really, in a stable place income wise, that where they can handle, a required monthly payment.
Mm. And what's the advice for those that are in residency or fellowship, or maybe they're like right out of school, right out of training in as an attending? At what point should they start evaluating their options, or and what point is it does it make sense for somebody to kind of like you to come into the picture and help them figure out their next options?
Yeah, no, it's a great question. I mean, this is the most important kind of window to get things right while you're kind of earning, have a low income level, relative to what you're going to be earning in the future, right? And that's really where you need to sort of assess those, forgiveness strategies. Are we going to head down that PSLF route? Are we going to plan to refi? But, there's something called a resident refi as well. That's something that we've seen a lot of activity in for, borrowers that are married while in residency, because you can kind of lock in $100 a month payment, as opposed to taking into consideration your spouse's income when looking at those income-based plans. But it's really a
Can you
really
expound on
good
that? Can you
opportunity.
explain what that
Yeah,
is?
yeah. So it's a private refi, and I happened to help out a anesthesiologist recently who, that was planning to go, to the private practice world, post residency. Income under an income-based plan would have been $350, $400 a month, and we were able to lock in, a 4 or 5% resident refi, and she locked in a lower rate and could just pay $100 a month, throughout the rest of her residency. When she finishes residency, that's when the full payments go into play. So it's 6 months after, residency, that those full payments kick in, but you're already locked in at a low rate. You can proceed with that, or even refi again, when full time attending.
That's awesome. So I'm surprised that so it seems like now is probably a great time to look at these things, whether it's refinance or just the whole field is just always changing and so complex. So What do you think is like the probability of people being able to sufficiently, equate which is the better path on their own? And, I'd love to hear more about the platform that you've built.
Yeah, I mean, realistically, folks can do what we do themselves, but we do see a lot of mistakes. And it takes a lot of time to really dive into what you should be doing. So, um, you know, it the system, as you mentioned, Evan, is super complex. It's constantly changing. What we do is student loans, right? This is what we're looking at every day. We're monitoring that. We're building processes and systems to help clients with repayment plans, and so that RefiDesk has been a super helpful tool for borrowers from that perspective. So um, you know um, yeah, that, I mean, it really is, it's made things a lot simpler for folks with this RefiDesk solution. It's a tech enabled solution, so borrowers kind of fill out a little bit of info about themselves. They upload some information from the Department of Education website, and really from there we can kind of take it from there and providing repayment options, which is super helpful to be able to kind of do that virtually, right? As opposed to having to set up 30-40 minute calls, maybe several times. um, you know so
So people can do this all without having to necessarily speak to someone if they feel like they don't need to.
yeah, and we're happy to hop on the call,
Hmm.
or hop on a call with the clients. And but we see doctors and residents and all sorts of folks have very busy lives, right? And so this kind of uses their time wisely and gets them the answers they need more quickly.
Yes. So at RefiDesk, would you be able to help them go through all the different refinancing options and their PSLF options, or is it more, hey, you've decided that you need to go down the refi route, and here are the different timelines, and by the way, you should consider this residency program that's available. How do you all operate?
Yeah, we look at all the different angles, Iván. If we'll look at federal repayment plans first. My sort of rule of thumb on the PSLF side is if you can pay less than what you owe, right? If I owe 200,000 in loans, but I can get 200,000 forgiven, that's a win, right? So we're
Hmm.
gonna look at that first and foremost. If that isn't an option long term, we always look at the resident refi, and you know, full time attending. We'll look at the full refi, but we even have an in school platform as well. So I think starting in July, when these caps go into play that we talked about, it's going to become a real conversation. So.
Earlier, you mentioned one of
Awesome.
the biggest mistakes most people make is they just are in the wrong repayment plan. How would someone know if they were in the wrong repayment plan?
Yeah, I mean, typically we would want to sort of help educate them on that. I would say the majority of borrowers we're seeing here and save, right? And that's been locked up for almost 2 years. And for folks that are pursuing that loan forgiveness, it's not helping, right? They're accruing interest. It's not helping. So, that's something that we kind of help lay out for you guys, for the client to assess.
Hmm.
And if they want to get going again on payments and start getting those qualifying for forgiveness, that's a conversation we have.
Okay, if you are in the SAVE program with the intention of having forgiveness on the back end, you might want to revisit your current strategy. Is that fair to say?
Absolutely. Yeah, no
Got it.
doubt. And there's something called the buyback, Yvonne, where you can actually potentially buy back payments while you were in save. And it's something that we can assess as well as part of our PSLF product.
Awesome. Well, listen, this has been super helpful again. Where could the audience find out more about you, about RefiDesk, and if they wanted to have a consultation and find out more about what their options look like, where can they do that?
Yeah, absolutely. So, first of all, I'd talk to Evan and Iván here. I think we'll set you guys up with some links to help kind of guide clients toward us. And from there, they can fill out their information, and we turn that around, quite quickly, anywhere from 24 to 48 hours. We'll send you kind of a summary of your options as well as a written write up so you can understand your savings opportunities.
Great. That's great. Well, we really, really appreciate you coming on, Jeff. And before you go, anything that the audience should know that we haven't talked about? Any other things that you want to make sure that they walk away with, in terms of value?
Yeah, I mean, I think there are three kind of key points here, right? The funding opportunities have changed in this business, in the student loan borrowing business. We're moving on from sort of that unlimited lending or borrowing opportunity to a capped lending. And we really need to look at kind of repayment opportunities and options here as you get closer to graduation. And it really right now it's not about repayment anymore. After you graduate, it's about a funding strategy, and then part of that funding strategy is coming up with the repayment plan while you're in school.
Awesome. Well, thank you so much for the education today and for coming on and getting introduced to our audience. We really appreciate it. I think it's a really unique and interesting solution. So thanks for coming on. Really appreciate you.
Yeah. Thanks for having me.
Awesome.
Good to see you guys.
Absolutely.
Thanks, Jeff.
And for you, the listening audience, please click subscribe below to be notified when we have our next episode. We'll be sure to tag Jeff and RefiDesk on all of our posts so you can find him and their firm if you're interested in reaching out. Have a great rest of the day. Appreciate
See you
y'all.
guys.